Securities analysts are super bullish on this stock, which just so happens to be a home builder. And I find that very interesting because on this channel, I've actually shown in real time multiple home builders whose shares have turned into multi-baggers. But my question is, now that there's been so much money already made with home builder stocks over the past couple of years, how could it possibly be that there are other home builder securities that could potentially be undervalued in this environment? And the analysts that I'm going to point out in this video actually think so. And I've taken the time to research the small cap home builder that these analysts recommend, which is a company by the name of Meritage Homes. And that's exactly what I'm going to completely dissect for you in this video. So let's take a look at this whole thing and see if it's even possible to make more money in this sector. Now, I never recommend for you guys to buy or not to buy particular securities. It's always up to you, and always speak to your investment advisor. Now, in order to make investing in home builders make any sense for you, I'm going to have to explain the following in this video. First, I'm going to explain the economic picture of the US housing market. I'll then show you the two names that the analysts are recommending. One is a mid cap and the other is a small cap US home builder. I'll finish it off with a deep dive into the small cap name and show you exactly what I see in this particular opportunity. So when it comes to thinking about the US housing market, we have to note that the extremely profitable thesis of lower supply has been playing out as expected, as new home builders are being relied upon to fill the gap of the overall housing shortage in the nation, as you can see in this chart. Despite the increases in interest rates, notice how new home builder sales have continued to rise in 2023. Despite most investors thinking that higher rates would be bad news for home builders, in fact, those higher rates have actually had the opposite effect and actually aided these new home builders, because we are now seeing what's called the lock-in effect play out, which is that current homeowners are reluctant to sell their properties and buy something new or move into a rental due to the financial shock that would come with losing their historically low mortgage rates. This is actually furthering the housing shortage and placing a greater and greater importance on new home builders. And guys, this housing shortage did not start overnight. There is a longer term trend which has a bit of poetry behind it, as this housing shortage was actually born out of a housing surplus just over a decade ago. And since the mortgage crisis of 2008 and 2009, there has been a serious underbuild of housing in the nation. Now, we are getting mixed signals as to where interest rates are expected to go, but some people are saying that you should be expecting interest rates to remain higher for longer. Meanwhile, Fannie Mae expects a mild recession next year and expects mortgage rates to fall from 7.1% in 2023 to 6.3% by the end of 2024 as job losses rise and the economy softens. And presumably that reduction in interest rates could actually open up the market for quite a few people who are at the lower end of the housing spectrum and are currently locked out of the market. But that only assumes that home prices don't surge when those interest rates come down. And that's exactly what two analysts wrote in their September 21 note called Buy the Dip, where they mentioned that the easy money in the housing market has been made, but a reduction in interest rates should shine a ray of light on the housing market. And they highlighted two home builders. The first is the 16 billion market cap Pult Group, who, as you can see, had their shares already double year to date. And despite that, they're trading at just 6.4 times next year's earnings. And you can see that the analyst consensus estimates expect earnings to continue to increase through to the end of 2025 to approximately $13 per share, which reflects a very juicy 17.5% equity yield. But it's this second name, the small cap home builder, which I'm more interested in. The name is Meritage Homes, and at first glance, you can see that it is trading at just 6.3 times forward earnings with a much smaller market cap at just $4.5 billion. And the reason why I like this builder is because it falls right into my wheelhouse, as it's a spec builder that has a ton of liquidity and a strong balance sheet. And for those of you who are longtime viewers of this channel, huge meow to you guys. This actually looks very similar to a name that we've been talking about for at least 2 years, I would say, which is a company by the name of Dream Finders Homes, which at the end of last year was trading in the single digits, and it ran up to approximately $30 per share this year before coming down just a little bit. The similarities with Dream Finders Homes continue, as they are primarily focused on entry-level communities, and they are located in areas experiencing the most growth, which include Arizona, Texas, and Florida. And I always like to see who's running the business. I really think it's important as value investors that we understand the background of the senior management that are leading these organizations. And when it comes to Meritage Homes, I actually really like the background of their senior management team. Stephen Hilton, who founded the company in 1985, is still involved as the executive chairman of the board. So he's been with the company for almost 40 years. And their CEO, Philippe Lord, has been with the company for 16 years. And he seems to be an analytical whiz who created the company's strategic operations and market research department, which analyzes land acquisitions, product, and pricing. These guys focus on spec inventory, which in my opinion achieves the optimal balance of risk with price competitiveness in the entry market. They only have an average of 15 homes per community, so the risk is very much spread out. And guys, that's not even the only risk mitigation strategy that they follow. They also have been using the excess capital generated to bring down their net debt balance to zero. And they also have almost $1 billion available on their credit lines, which makes them very financially flexible. If rates decline and they see that backlog of home purchases begin to increase, they can very quickly react to the changing market dynamic. And if things continue to get worse economically, they are protected, as you can't go bankrupt if you have no debt. And there's one other part to their strategy that I'm very impressed with. I'm not actually a fan of optioning the majority of the land that you intend to build on, although that strategy can make you more money and give you higher returns on equity. If there is a market turmoil situation, you could have potentially just wasted a ton of money. So I actually like Meritage Homes' strategy of owning the lots outright through mostly equity. This will absolutely make you less money in the long run. However, it is a safer strategy. And I might be alone on this, but when it comes to home builders, I will choose safety every time. This is not a business that you want to mess around with. A lot of investors have lost money investing with particular home builders. Now guys, let's get into their guidance for 2023. They are expecting for 2023 diluted EPS to come into the range of around $19.12 to $19.80. So call it $19.50 to be even, which at the current share price of $122.50 as of the recording of this video reflects a cool 16% equity yield. That is not bad, and I don't think I'd be using options types of opportunities to invest in this particular name. But the question is that earnings that are expected in fiscal year 2023 an earnings blip, or is it somewhat sustainable? Well, according to the analysts covering the name, it looks like they're expected to maintain that level of earnings until at least 2025. Now, I personally have to build out a model for Meritage Homes to add into the tracker to really understand if those earnings are sustainable for a time period beyond even the next couple of years, and that's something that I am going to do. But because I've been investing in the housing securities markets for a while now, I recognize that there's two huge market forces working for them. The first one is that there's a very strong possibility that interest rates do decline in the following year, at least by the end of 2024, which should spur some additional home demand in the entry-level space. And the second is an increasing demand or increasing reliance on new home builders to unlock supply as current homeowners continue to feel the lock-in effect, which is what I described earlier in this video. So overall, I believe that there are strong economics that are supporting home builders into the foreseeable future. And I also believe that that's why Warren Buffett's Berkshire Hathaway actually acquired just all major home builders altogether, or at least 3 of the major names in the securities markets. And that's actually why I came out here on this channel and I told you guys even last year that I was making home builders my #1 position, and you guys see how those 2 particular names have done, but you guys have also seen how many of the names in the home building space have done over the past year. Now, for a full list of home builders that I currently find interesting, you can actually get access to not only the names, but the models that support the names at that lower tier of the Patreon at just $5 a month. And remember guys, as I always say, if you don't find the Patreon of value to you, you can always request a refund within the first month, and so there's 0 risk to you. Now, despite the fact that I see opportunity in housing, retail, regional banking, and manufacturing, I also see some real pervasive risks that could really hurt all of our portfolios. And I've taken the time to identify and dissect all 4 of the major risks that I think are pervasive in the economy right now. So click this link to this video where I dissect all of that information so that you are aware how to protect your portfolio.